Thanks very much, everybody. Those of you who've never been to Future Proof, you're in for a treat musically, sonically, intellectually. This is my fourth one. I've been to every single one, including the one in Miami, actually 5 now. And I think this conference is a successful combination of events. We used to kill ourselves trying to figure out how to get really good speakers on stage. And then we realized when Matt came along and had this idea, let's do it outside. And let's not only do it outside, let's bring in a lot of cool food trucks. And let's bring in a lot of cool cocktail parties. And then let's bring in Bush. And let's bring in Blues Traveler. And all of a sudden, you have a community of people that want to hang out together. And that's what this is all about. It's about community. We have a dear friend of mine, Dan Ives, who is technically Managing Director and Global Head of Tech Research at Wedbush, but that's kind of a small part of what he's actually become. He's a little bit of a phenomenon unto himself. He's got a lot of strong opinions on things, and he's a very colorful personality. So Dan, I just want to talk about what I think is the most important thing, which is the shirt business. Yep. Now, the title of this is How to Invest Without Losing Your Shirt, but let me just tell you, Dan's in the shirt business. This is Dan Ives clothing here. Okay, so I'm wearing Dan Ives, danivesclothing.com. Here we go. So he's in the business, a clothing business now, not just the tech business. So the guy's an entrepreneur. Tell me a little bit about how you came up with this design. What's the paper clips? Is there some significance here?
Well, first off, I mean, they talked about me as a fashionista. I think he's kind of an under-the-radar fashionista. I mean, look at this guy.
All right, thank you.
Look, in terms of, like, I have a collab with an awesome designer in Williamsburg, Brooklyn, Snow Milk. So we designed this together. They've done a lot of things in New York, and they've done stuff for Djokovic and a number of other players. And they wanted to ultimately design a shirt. A lot of this is mine in terms of what I designed. The paper clip is something that they're known for. And this is my jacket, which will be coming out sometime in the fall.
All right. danivesclothing.com, right?
Yeah. danivesclothing.com.
More than just smart comments on technology. So let's talk about tech. We got a half an hour here. You know the drill. If there's any questions, it'll show up here. I'll keep track of that. But Dan, tech's had a really great year. September, October, historically is a tough month. Give us the 30,000-foot view right now, where we are in the tech investing landscape.
Look, I think we're going to continue to go through these periods where investors will say, tech, the run's done. Valuations have reached a peak. And ultimately, I just continue to view it as, like, when I think about the AI revolution and I think about the tech build-out, we're in the bottom of the second inning to where this is all heading. So when I look at names, especially on the data center side and on software, and the core use case names like Palantir, Snowflake, MongoDB, and others, like I've talked about, I mean, the AI party, it was 9 p.m. That's where we started off. Now it's about 10:15 p.m. Party goes to 4 a.m. And I think tech stocks are going to continue to have a pretty big move higher into year end as the spending and the derivatives start to play out. And I think that's something that anytime these stocks sell off, the winners are the Ives AI 30 that we've identified. Those are the names that you own.
I just want to address the valuation issue, because that's sort of the big, elephant in the room. We've had some big people sell recently. Druckenmiller sold his entire position in Palantir recently. There was a valuation problem he had. Buffett just sold a chunk of Apple, I don't know, 10%, obviously on some valuation concerns there. How do you address that? We all know stocks can say overvalued for a long time, but is there any validity to those concerns?
I mean, I think, look, if you, and I've talked about it, many that have heard, like, if you focus just on 1 year valuation, you've missed every transformational tech stock the last 20 years. Now, Palantir being a good example, remember, they hated 15, despised it at 40, 100, yelling from the mountaintops, 150, bears are, yelling from their caves. But Palantir, in my opinion, is going to be $1 trillion market cap in the next 2 or 3 years. Now, if you look at valuation today, you can't justify that. but it's my view, as the use cases expand and really explode, they're significantly disrupting the whole software ecosystem. So I could argue that free cash flow goes up 5, 6x over the next 3, 4, 5 years. That to me is how you have to look at the transformational names. I think it's very easy to get caught up, whether it's, we've seen it in Microsoft at periods, we saw it in Alphabet, and obviously that's reversed in terms of, now at all-time highs. I think you have to focus on the spending and where numbers could go. I think Street's still underestimating numbers where they ultimately go into next year by 20 to 25% based on all the work that we see. And that's why we continue to be very bullish on tech, given where we are as AI spend is just starting to play out the next stage of growth.
So there was an AI bubble in 2000, and now the doomsayers are talking about, I'm sorry, there was a internet bubble in 2000, and now the doomsayers are worried about an AI bubble here. You have been very vocal in saying this is not a 1999 moment, this is more like a 1995 moment, and those of you not old enough to remember this, 1995 was a big year. It was the year that we saw essentially the internet come alive. That was the Netscape browser went public in August 95. I was there for that. And suddenly that was the shiny object of its moment. Suddenly everybody sitting at home who had the first way to invest at home, DLJ Direct and things like that, and had CNBC to watch, could buy something that was directly related to the internet. So Netscape was a huge event for us at CNBC. We got big ratings after that. And we rode that all the way up to 2000. So I want you to address that this is not a 1999 moment, this is more like a 1995 moment, and say why it's that way.
So there's 3 reasons why I view this more of a 1995, 1996 moment than a 1999 moment. One is when you go back to, and again, I covered tech stocks back in late 90s, early 2000s. When you go back to that period, the use cases weren't there, A. 2, it was being funded by really startups, upside down business models, and really venture community that, I always viewed as something where it was always one step away potentially from falling apart. 3 is that you had companies losing significant amounts of money that if the use cases didn't ultimately work out in the next year or 2, that they were going to fall apart. Compare it to today. Big tech spending $350 billion on CapEx, and you have a $1.1 trillion on the balance sheet. You haven't even had sovereigns, rest of the world. You think about Asia ex-China. No one's really even started to focus on AI. Middle East now just starting to. 2, when you think about the use cases are exploding on the enterprise. And that's what you see. Okay, for a while it was just Palantir, but look at earnings season. Look at Snowflake, look at Mongo. The consumption models are now starting to explode higher. Now you could argue on the negative side of that is the Adobes, the Salesforces, the software, their lunch is getting eaten. But Bob, I view it as like the enterprise use cases are now just starting to play out. The data center spends there. The cybersecurity that I view as a second, third derivative is starting to play out. The consumer side, and you see that with Zuckerberg and everything at Meta, I continue to think that could be a $1,300 to $1,500 stock. And then you start to think about the power plays, the infrastructure, Nemesis, CoreWeave. To me, it's really about the derivative, and I think that's where a lot of investors are missing. It's like, and that's why we've laid out with our Ives AI 30 is that it's trying to play the second, third, fourth derivatives. For every dollar spent on an NVIDIA chip, there's an $8 to $10 multiplier across the rest of tech.
Yeah. And those of you who don't know, Danny is a very consistent, systematic investment ideology. And I want to talk a little bit about your ETF because that reflects your investment ideology. But largely, Dan's been around 30 stocks for a while, and his new ETF, Ives, has been very successful. What do you have? 500?
Yeah, about 530.
When you
in
started
about 3
early
months,
June,
yeah.
right?
Yeah, it's about 3 months.
And you should, if you're interested in what does Dan think and why does he think this way, the ETF kind of lays it out. It's technically an index, but it's really active management, and that it reflects your investment ideology. Is that accurate?
Yeah, and the whole reason we did it is all based on our Ives AI 30 report. So many investors, institutional, retail, how do you invest in AI? We would come here to Futureproof a few years ago. It's like, no matter what, breakfast, lunch, sun comes down, you own NVIDIA, you own Microsoft. But then, as it started to spread, you need to own the second, third, fourth derivatives. So it was to put a list together that is identifying some of the derivative names that maybe investors aren't identifying. And I think it's very important when you have an AI ETF or an AI research that it truly identifies the real winners. But we just took a few names off, add a few names on, some acquisitions, some other reasons. So it's active, and I think it gives investors a way to not just play our research, but understand who the pure plays are in the second, third, fourth derivatives of what I view as a fourth industrial revolution playing out.
And Dan lays this out in the ETF. I mean, if you really want to understand what he's thinking about, take a look. And it's thematic, really. It's semiconductors, hyperscalers, cybersecurity, robotics, cloud infrastructure, and essentially there's 2 or 3 stocks in each of these buckets. Let me just hit a few specific stocks, because I know people want to hear about things like Apple and Tesla. Yep. Well, I'll start with Apple here. That's an AI turnaround name, I think. I'm a fanatic Apple guy, but I've been extremely frustrated about their AI situation. I'm certainly not happy with Siri. I use Perplexity now. Yep. I can't imagine how they're going to catch ChatGPT at this point. But whenever I get frustrated with Apple, I think there are, 8 billion people on Earth, and there's 1.5 billion iPhones users? I mean, think about this. 1.5 billion iPhone users and 8 billion people, that's like 17% of the population have an iPhone. It's
and 2.4 billion iOS devices.
It's crazy, with those numbers. I mean, just think of the service capabilities around that. But just talk about have they dropped the ball on the AI thing? They've already lost a couple of their key engineers around that.
Look, they're playing a baseball game without a shortstop. I mean, that's essentially what they're doing. I mean, the reality, and we've talked about it, it's like, look, Cook, Hall of Famer, we've been a huge supporter of Apple and continue to be. But there's no doubt, when it comes to AI, that's the missing piece in the puzzle. When you go to any Apple event the last few years, it feels like Michael J. Fox Back to the Future, right? And I think, as opposed to every other tech player, I think the best thing that ever happened to Apple, 2 things. One, the Google DOJ suit essentially, getting thrown out. And that's huge, because now they're going to be able to double down the Gemini partnership, and that will be essentially their AI play. They'll introduce iPhone 17 tomorrow. But I do believe if they actually double down that Gemini partnership, we talk about Perplexity as potential acquisition, I think you could add $7,500 to the story, given the install base. That's why I view Apple as a name you own, you buy here, given... I still think right now, from a sentiment perspective, New York City cab drivers pretty bearish in Apple.
Let me move on, because I want to hit a bunch of names here. Another AI turnaround story, Tesla. Dan and I have talked about Elon Musk many times. I think we have a similar position. I think he's one of the greatest geniuses of the 20th century, and yet he drives us all nuts. It's disappointment after disappointment and triumph after triumph, and you just kind of have to live with that emotional roller coaster. Is Mr. Musk's foray into politics over, do you think?
Look, and obviously, the shut up Dan, and we went back and forth with Musk. He had to get out of politics, and now he's essentially done that, right? I mean, he'll have here and there, but I think it was clear that was an experiment gone bad, brand damage that you saw, and the reality is you need Musk as a wartime CEO when it comes to AI, just like you see with Zuck and what you see with Nadella and others. You're starting to see that now. The board laid out a package that's going to keep his CEO, I think, for 5 to 7 years. But Bob, to me, it's all about autonomous and robotics. When I think about the best physical AI plays in the world, it's NVIDIA and Tesla. And I think Tesla is one where from a scale and scope perspective, I don't believe anyone will compete with it. I think when it comes to autonomous and where I see the landscape, we view that as a $1 trillion opportunity. And that doesn't even include Optimus and the robotics opportunity, which is why I think some of the parts, it's north of a $2 trillion market cap. But it's like I said, look, haters hate, right? Anyone that viewed this as an auto company, they've continued to be proven wrong again. This continues to be more of a core AI play, especially when it comes to physical AI and the future.
But what happens in between? I mean, I know he's betting the farm on autonomous vehicles, but is the demand really there? I mean, I know what your point is correct. He sees Tesla essentially as an AI company, not a car company, and that's why he's getting the valuation he's getting and not a valuation that Ford has. But still, I mean, he seems to have no interest in running a car company, but it is a car company. I'm sorry, it is. They're not updating the models. It's maddening. It seems like he doesn't particularly care about improving the Tesla and selling more Teslas to the world.
Look, I think it's been a frustration point that you haven't had true refreshes. You haven't had true model upgrades. I do believe in 26, you probably have 2 to 3 true model upgrades. But the reality is, if deliveries go up 100, 200,000 a year, that's not moving the needle. To me, it's all about it's about robo-taxis, where you'll be in 30 or 35 cities over this next year. It's the view that Optimus, you actually start to get some sort of volume production. And I think we sit here a year from now, and Tesla is a lot closer to a $500 stock than a sub $300 stock. So the risk reward here on Tesla, I continue to view as massively favorable.
So let's talk about some other names, chip names. NVIDIA and AMD, they're in the ETF here. I mean, I get we're spending massive amounts of money, but when I look around the world, I see even more spending outside the United States. It seems like the Middle East, Saudi Arabia, the UAE, they're spending massive amounts of money to build out infrastructure out there and data centers for years and years. Is that part of this continuing global expansion story?
Look, and that's why I believe NVIDIA is a $5 trillion market. I mean, I believe NVIDIA is cheap here relative to what ultimately numbers are going to be, as well as China coming back online. And look, the reason Jensen's the godfather of AI, and the reason there's one chip in the world fueling the AI revolution, which is NVIDIA, they're years ahead of anyone else. And the reality is, even Chinese tech stalwarts, despite what Beijing says, they'd rather go for to call it a third, fourth best NVIDIA chip than the White Castle of chips in a Huawei. And I think the reality is that they are so well positioned. Then you look at a name like AMD. I mean, AMD has been a table pounder for us because I believe they're going to get more and more share of that opportunity. Lisa Su, if she's flying the plane, I'm in 3A drinking a Cabernet. And that's a stock that I think continues to see significant re-rating higher.
So while we're on AI here, let me just sort of address what I think a lot of people are wondering about, which is what's the impact that's going to be, not just on, let's just talk about productivity, okay, the broadening out story. We all know what software as a service did to, for example, the bookkeeping industry 25 years ago. There aren't any people who have physical books anymore. Those people already lost their jobs, so that's not an issue. Software did that already. The argument is AI is the app that eat all the apps, essentially. Dardra Modi had a comment just recently. 50% of entry white-collar jobs will be eliminated in the next few years. So there's the sort of, you know, sort of standard doomsday idea.
Of course.
Where do you see that? Because that's going to go to the heart of selling AI to the public. Of course,
and remember, just because you wear a bow tie and you have to be draconian, but the reality is, like in 1995, 1996, and going back to the early part of my career, everyone's like, dude, internet, that's it for jobs. It's done. Meanwhile, it created probably the biggest asset in this country, the Silicon Valley. So my view is, like, when it comes to AI, yeah, like, is software going to be ultimately back against the wall until they prove it in terms of Adobe, Salesforce, and others. But look at Oracle. Oracle is a perfect example, one that came out, and look at how they're dominating. I believe when it comes to like society and AI, I think it's a net job creator than a negative job detractor. Because it speaks to my view, like from an innovation, from engineering, and for the first time in 30 years, the US is ahead of China when it comes to tech. And for someone like myself, I spent so much of my time in Asia, you know, every time for many, many decades, you go to Taiwan, you see these fabs, and then you land in Newark, see some fight at Dunkin' Donuts, and you're like, man, we're so far behind. And the reality is that that's now starting to reverse. So it makes me just that much more bullish about the U.S. tech trade.
So you can see a situation where it might be job additive. I can see that argument to a certain extent. So people say, okay, radiologists are going to be replaced by AIs. They're going to read radiology reports. And yet, to the extent that a hospital can cut a radiologist because they could save some money, if you could have a radiologist working with an AI, they'd become more productive, essentially.
Of course. And
so
look,
if you have a cheap enough AI to working with the radiologist, you might want to hire more radiologists.
Look, and the reality is, like, I'm just not like this doomsdayer, like where people always view like the glass half empty. I view it as like my job fundamentally is like to make people money buying stocks. And the problem is, like, the reality is when it comes to AI, even though there could definitely be some negatives relative to job growth in certain sectors, it's a boom for tech stocks. It's a, you know, this is really the biggest tech theme in the last 40, 50 years that we're seeing across all industries. But I believe over the coming years, look, I've, you know, traveling so much around the world, around this country, I've seen many cities that had 50,000 people, now they have 15,000 because the factory is lost and they have all educational issues and whatever. The problem is, like, now there's a whole opportunity for like innovation centers, engineering talent. Like, and for the first time, it goes back to the US is ahead of China. It's led by big tech, from data centers to chips to cybersecurity, everything else. And that's why right now in this game of high stakes poker, the US is holding the biggest poker chip there is, and that guy's wearing a black leather jacket, and his name's Jensen.
One of the interesting, I want to broaden this out a little bit, one of the interesting things we saw last year was the explosion in utility stocks, primarily as the energy infrastructure play around AI. And suddenly, people who were boring energy investors who were relying on a 4% dividend every year, suddenly the stocks were up 30%.
Yeah.
And it kind of blew everyone away, like, oh, yeah, that makes sense. Why didn't we see that before?
But Bob, that speaks to my whole, I mean, you've talked about it so much, like, it speaks to my whole thesis that you have to be focused on the derivative. There's more data centers under construction today than active data centers. You need 6 to 8 times more power to even get to 20% of what I view as true AI capacity. That's why Aklos and nuclear has been one of our favorite plays. GE Genova, another one. Like, I believe there's a lot of utility plays and others, and I think that's why, like, you have to think about AI as a broader theme, not just big tech, 7 to 10 names. It's understand the derivatives. It's the whole reason that we put together the Ives AI 30. It's the whole reason that I believe this is going to be a tech bull market the next 2 to 3 years. But I go back to, like, I'd rather own tech stocks and be in that Ferrari in the left lane, going 100 miles an hour, than own value in the minivan, the right lane, going 45 miles an hour with the bumper sticker saying my kid was an honor student in 3rd grade. So I would just rather, that continues to be my view relative to tech.
And for most of the people here are RIAs, I think, probably 60, 70%. What do you say to them? When I talk to them, I say, what are you interested in AI? And they say, well, first off, I want to know, is it going to replace my job? Number one. But number two, is it a help? How would it help me? Is it a help in asset allocation? Is it help in running my back office? What can it do? So address that first question.
So I'd address
there.
it first, like, if you play this trade well, dude, you're going to be sitting in Ibiza in 15 years not worried about if your job is replaced as an RIA. So the point is, as the opposite, own value get scared by the haters when the bears come out of hibernation because they can't see AI in the spreadsheets, and then you'll have to figure out Times New Roman and Ariel on the resume. So the point is, like, to me, I think it's more being afraid of missing the tech trade. And again, the haters, the Armageddon, I get it. But I think that just creates the opportunity, right? Like, to me, like, NVIDIA trades off a bit after the quarter. Oh, that's it. You know, this is done. And then we'll sit here, what I believe 6, 9, 12 months from now, looking at NVIDIA as a $5 trillion market cap.
But address their idea about, is it going to replace their job? What advice are you giving them?
I believe the job is that much more important today because of these trends. Because this is not just 60-40, the portfolio. You have to be able, as an RIA, to identify the trend. That's why so many are here in terms of, especially growth-oriented RIAs, and so many that I speak to around the country. So I would argue, like, the whole, like, the AI portfolio, and it's gonna, I mean, I view that as a fairy tale. To me, it actually is the opposite. I think it's actually that much more important in terms of RIAs and that investment role that you're gonna play, because we're living in a fourth industrial revolution, and we're basically year 3 into an 8 to 10 year cycle.
So we were in inning 2, you said before, right?
Bottom of the second inning.
Yeah. Dan, I want to thank you for your time. You just said something very important, and I want you all to think about this, particularly those of you that are RIAs, about how important what you're doing is. You're providing advice for the financial well-being of the country. So I ask people all the time, what do you do? And they say, I work on the trading desk at JP Morgan, or I work on the floor of the New York Stock Exchange, or I'm an RIA. And all that's true, but it doesn't really convey the importance of what you do. And I spent 35 years at the New York Stock Exchange, and I stayed with them and with CNBC for a reason, because I thought the work that was being done at the NYSE was important, and yes, even noble. Even if you say, I just work on a trading desk at the JP Morgan. What do you really do? Think about, what business are you really in? And yes, you can say you work as an RIA or a trading desk, but here's what you're really in. You're in the dreams business. You're in the business of helping people realize a happy and healthy retirement. You're in the business of helping them put their kids through college.
Yep.
What could be more important than that? What could be more noble? And when you think about it like that, all of a sudden, you know, you're not just some guy running an RIA and, you know, charging 1% fees. You're a guy who's helping out the future of the country. That's why I stayed with CNBC, and that's why I stayed with the New York Stock Exchange, and that's why I'm still involved with things like the Future Proof Conference. So start walking around thinking like that, and you'll realize how important your job is. You're helping make the country wealthier and wiser. And there's no artificial intelligence that's ever going to replace that, to Dan's point. You may use artificial intelligence to help you run your business better, to do asset allocation better, to help run your back office better, but when the phone rings and the client wants some help, an AI ain't going to answer the phone.
Yeah.
You're going to answer the phone.
But I'd also say you could be humble. You're a part of financial history. You've been the bedrock. Many people in this audience have grown up watching you. And I think, like, you know, it actually laid the groundwork for where we are today. So I just want to say, like, to be on the stage with you, it's a highlight, you know, not just of the day, of the week, but, you know, over the decade.
Thank you, Dan. Appreciate it. Thank you, everybody, for coming. I have a few copies of my book. I'll sign right over here if anybody wants to come over. I don't have many, but come over and say hello. Maybe Dan will be around, too.
Bob has an epic book. It's almost a historical book.
Thank you. Thank you, everybody. Thanks for coming.